I'm Gwen Preston of Resource Maven. We're here at the Metals Investor Forum in Vancouver. It's January. And I'm joined by John Budreski of Morian Resources. Now, Morian has had a pretty exciting last, 6 months sort of time frame as your coal project, on which you have a royalty, has gone into production. So let's take a little bit of a step back and explain to me how you ended up with the royalty on this Donkin coal mine in Nova Scotia.
I like to think we've had a very exciting last 5 years because we just passed our 5-year anniversary. There was 2 bulk materials assets that were in Erdene Resource Development Company. We spun them out through a restructuring of the company. That gave us the assets, and then we set to work to surface the value of those assets. The aggregate asset, which is the smaller of the 2, we renegotiated the deal with the owner of the resource, and then we brought in Vulcan Materials to develop that. The Donkin mine is a different story. That mine was originally brought to the edge of production by the federal government in the 1980s. So they drilled 2 tunnels, 2 miles, 3.6 kilometers under the ocean, 7 meters in diameter each of them, and then stopped the project.
Right.
We ended up, through a provincial bidding process 20 years later, having 25% of that project. And then the operator at the time was not interested in advancing it at a normal rate. So we sort of got together and a bunch of us worked on it and replaced the operator. So the new operator came in about 3 years ago. That's Chris Klein. He's a billionaire coal operator, made his fortunes in the Illinois coal basin, but a lifelong miner and a family mining company.
Right.
And so we sat down with them and exchanged the 25% working interest for 3 milestone payments. $2 million up front, $2 million on first production, and $1.5 million on first export. And then we have a royalty, which is 2% of the first 2 million tons and 4% of the next, any tonnage after that.
On an annual basis.
On an annual basis, yes. Yeah. And so we're sitting with this little, very different mining company, which has cash because we received all of the milestone payments. And we've been buying back stock over the last 2.5, 3 years. We bought back 12% of our shares. And then the bigger event for us recently was that we started to pay a dividend.
Right, so the mine gets permitted, gets into production,
Yes.
You get these milestone payments, you've got $3.5 million in the bank right now, so that's all great.
Yep.
And so that money in the bank right now is enough to support the initial dividend as this thing gets into production, which is just a great backstop. But the bigger picture story here is that Morian and you are very focused on shareholder returns.
Yeah,
That's what every company should be focused on, but I think that really stands out with Morian. And the argument here is that the Donkin mine should be generating very significant cash flow for Morian for years, and you want to basically return that to shareholders.
That's exactly it, and we say it and we mean it. Our value add in this company was not geology. Our value add was taking mining assets and converting them into cash flowing assets. And so we're not going to take that cash and go looking for more mining assets. That's not our skill set. Our skill set is delivering cash to shareholders. And so we started that with the dividend. The $3.5 million will actually pay for the dividend, and we'll still have a couple of $1 million left over from that. So we might do some small acquisitions with that.
Sure.
But the nature of the investment is that we have this royalty on a mine that commenced production 11 months ago. And they're ramping up that production. It's our intention to take that royalty and use that to pay a dividend. The dividend will fluctuate. We put out a half a penny dividend for 2017. We'll do a quarter penny per quarter dividend in 2018. But as production picks up, it's our intention to lift that dividend, and we'll be a cash play on seaborne metallurgical coal.
Right, so talking about lifting the dividend, there's a few different ways this could go. First of all, the Donkin mine has a mine plan right now that gets it to a certain size.
Yes.
But it could be a lot larger than that based on the resources there. And then, like you say, this is seaborne metallurgical coal, the price for which I'm bullish on, and I think that there are fairly strong arguments going forward. So talk a little bit about what kind of cash flow might be coming, will come to Morian, or could come to Morian under these more bullish circumstances.
So we have a permit, they have a permit to operate the mine at 2.75 million tons per year under sort of a conventional pricing of coal, seaborne metallurgical coal, so something over $100 US, let's say. That would yield a royalty of around $8 million a year to us. We have to pay tax on that, and so that would yield an after-tax royalty of about $5.5 million. And for the convenience of math, we have 55 million shares outstanding,
That works.
so there would be a 10-cent dividend. The resource there is massive, and the history of Chris Klein and his mining has been longwall mining. So he, through investing substantially more capital, could lift the production. And so conceivably it could be a doubling of production.
And that matters in particular for Morian because your royalty also doubles for the tonnage that's above 2 million tons per year.
That's correct. So then that royalty goes from $8 million to something like $20 million. And then we have 15 after tax or 14 after tax. And then we could see ourselves at a 20-cent dividend in that wonderful world where everything grows big and prices stay up.
Absolutely. And I mean, somewhere in the middle is, we don't need to be in the wonderful world of everything.
No,
Somewhere in the middle
no.
seems pretty reasonable.
If it never gets past permitted production and coal prices stay in where they are, this is a stock that's going to pay somewhere between, let's say, 8 and 10 cents a share dividend.
Right. And you're trading at what today?
63 cents today.
Right. So it doesn't take long to get that back. The value remains there.
Yep.
And this is a low risk exposure to commodities in a bull market.
It's a 25-year mine life for that project. The Granite project has a 50-year mine life. So we're a long-term annuity
Right.
for people.
We didn't mention the Granite project. You mentioned briefly the Granite
Yep.
project. This is an aggregate project that another company is putting into production soon. 2 years?
Yeah, probably 2 years. They're waiting for recovery in the U.S. aggregate market. And that, but it's a big one. It's a $100 million spend to put it into production, so it's no small project. Royalties from that would be $500,000 to $1 million a year. I think of those royalties as paying all the costs of running Morian.
Right, exactly.
And then the metallurgical seaborne coal royalty will be the cash payout to the shareholders.
Right.
That's if somebody doesn't come and buy us first, because it's an attractive cash flow.
Certainly likely. And I mean, the royalty space is an active one. I would not be surprised to see a royalty player be interested in coming in to get the cash flow that you're talking about right now.
Exactly that. Yep.
Yeah. So a bit of a different company in my world, in the
Yep.
mining world for sure. Seaborne coal, aggregate, and a royalty, but strong focus on shareholder returns.
And the dividend.
The proof is now in the pudding, right?
Yeah, we've been waiting to pay a dividend for a number of years, and it's nice that we've got our first one launched. And it was December 22nd. It landed 27th. It landed in people's accounts.
Perfect. Merry Christmas.
Thank you.
Thanks for watching.